Welcome back to episode 113 of the Your Wealth and Beyond podcast. I'm your host, Andrew Raffel. And today, listeners, viewers, joining us in the studio, Michael Seitz, the visionary CEO and chairman behind EarthWise Pet franchise. Today, we're going to dive into, Michael, your entrepreneurial journey, explore some of the strategies behind the success that you've had with your family company. And then also we'll discover how he's shaping the future of the pet industry. So welcome to the show. How are you today?
I'm doing well. Thank you, Andrew. Appreciate the opportunity to be on.
So coming into a family business, you guys started the company back in, what was it, the 70s?
Yeah. My father was actually a restaurateur down in Southern California, entrepreneur since he was 23 years old. I grew up in that environment. My mother was actually a professional groomer. And so, the restaurant industry can be challenging, tough hours, long hours, late nights, not the most conducive for a family kind of a dynamic. So approached my mother back in 1977, said, hey, what do you think about kind of joining forces and going into the pet industry? And so they purchased their first grooming shop back in 1977 and then opened their first pet retail store back in 1978. And that was kind of the start of the family component to why I'm here today.
So growing up, did you spend a lot of time when you weren't at school? Were you in the business and learning and stocking shelves?
I was. I became. Back then the pet stores were very different than they are today. There was a lot of cleanup. We had fish and stuff in the stores at the time, and I learned how to clean fish tanks. I used to sleep when I was a little kid. I used to sleep on the dog beds in the stores while my parents were working. I just kind of grew up with that in the blood. I actually remember a couple times where my father would be on his way to work, and his role was to drop me off at school on the way to work in the morning, and every once in a while he would just forget I was in the back of the car, and we'd drive up to one of his stores and I'd be like, hey Dad, I'm still back here, and he'd freak out and have to drive me back to school to drop me off. But it's been a fun ride.
I'm sure there's some memorable times. You're learning a little bit of hard work and what takes for a business at that point, just a small business. I'm sure there was ups and downs as they tried to grow to the success each and every year.
Yeah, looking back on it now, I was fairly insulated from it because I was pretty young back then when they were involved, but I definitely learned the work ethic component to it. My parents were definitely hard workers. Sometimes Christmases were pretty thin kind of thing, just because that's the nature of small business. You're battling, and some years are good, some years are not. But they taught me the drive. They taught me the joy of working for yourself, and of having an opportunity to grow something that you've built. And at the same time, a very realistic view of the challenges that come with business ownership as well. It's not as rosy as we think it is from the outside, and yet it's absolutely worth it if you have the right mindset.
And so, did you think in your career to first step away from the family business, and did you spend some time in the corporate world outside of the family business to learn those chops?
Yeah, you're going to be shocked at this. I actually went to dental school. And so, I was never intending to go into the family business at all. And so, I majored in Japanese in college. I was planning on international business, and then I had a passion for the health industry as well. So I thought, well, I'm going to go into dentistry. It's a great profession. It makes a good livelihood. I'm going to franchise it. That was always kind of my long-term vision. And while I was in dental school, I realized, wow, the red tape around franchising in the dental industry, it makes it essentially almost an impossibility to do what I wanted to do. So it kind of lost its savor a little bit. But yeah, I was never intending to go into the family business. It wasn't until, I think I came full circle when I realized, the entrepreneurial drive within me was really strong. I had a turning point moment when I was actually shadowing, a really good friend of mine that was a dentist, and sitting down with him, I said, I got to ask you, I've been observing dentists for a long time. I really love the profession. what do you love about it? And he said, well, what I love about it is I wake up every day and I know about 99% of what I do is going to be the same every day. And I like that reliability. And I thought, that's it. I'm done. I can't do this anymore. That is so not who I am and what I grew up with. And so I started looking for other opportunities before I came back.
And so how long have you been, when did you join forces with the family company at EarthWise? What year was that?
So I approached my father back in 2005 with the idea of franchising the concept, of modifying the model, building some prototypes that collectively together that we could ultimately franchise. And so in 2005, that is when I approached him. We opened our first prototype in 2005, second one in 2006, and then a friend of mine, a dear friend of mine, longtime friend and current business partner of mine, came in and actually bought my father out back in 2007, and with the help of a small silent investor, we started franchising in 2008. And so, my family's never been involved in the franchising component of it, but definitely integral in those initial prototypes to build what we have today.
And up until that point, before you jumped in and started helping on the franchise model, how many stores or locations did we have in 2005?
Yeah, in 2005, so my parents only had a couple locations at the time. And so they had some in California. We moved up to Portland, Oregon at the time. And so they had a couple locations. And then we built 2 prototypes. And then the third prototype that we built, actually, we sold to our first franchisee. So part of this system, we had 3 stores as of 2008. That's what we had on the system. And my family had a couple others that were outside the system, and they still do today.
Yeah. And so did you have a background in the franchise model, or was it where you said, because you had indicated earlier with the dental that was kind of a passion of yours, so it's always been a passion, but did you have the wherewithal to, or did you learn on the go?
I learned on the go. I think I know that when you have that kind of drive to learn, you just have that drive to learn. And so I thought it was a great model to scale. I loved the fact that you could mitigate some risks, and that there was that you weren't having to come up with all the capital. And it just seemed like a great model. I think I always joke that I was young and naive enough to do it, and I'm glad I did. I was young to take all the risks that I could take at the time. I didn't. If it failed, I could start over. But it was a really great move. But it was tough. There's a lot of things that I didn't realize about franchising when you get in. As a franchisor, nobody ever tells you when you start to franchise that in the franchising world, it's very difficult as a franchisor, and ultimately, you got to have 50 plus locations before you're really making any money as a franchisor. And that would have really, I think, deterred the idea early on if I had known some of those things. But yeah, it was one of those where I knew franchising worked if it was done right. I didn't know a lot about it though, and so I happened to have a good friend of mine that was a franchising attorney, which helped, and to kind of talk through what that would take. We looked into it for a long time before we did it. We could have gone the corporate play and just opened a bunch of stores and done it that route, but our industry is too segmented. It's there's a reason that there haven't been a lot of roll-ups in our industry. It's that real community kind of owner-operator vested interest component is very important in our industry. And so franchising was the right play ultimately.
And so for the listeners and the viewers, and even for me as well, like a PetSmart, would that be all corporate stores? They don't have a franchise model?
Yeah, PetSmart's corporate. Petco is also all corporate stores. There's no franchising models in either one of those. PetSmart had teamed up with the veterinary clinic Banfield for a number of years to have Banfields inside of their locations, but they were still separate entities. And so neither one of them have really gotten into the franchising world. There's a couple of franchisors out there in the pet space, we being one of them. There's basically, there's 4 of us that are really national. And other than that, there's, you see some smaller ones, some startups here and there, but there's no big players other than those 4 franchisors and Petco PetSmart.
So in those early years, as you were building out the franchisor, the franchisee model, what are some of the things that you you guys had to fully address to show your value, the niche, the brand? Like what were some of those things like that you guys did really well, and you're like, okay, we do this a little bit differently than the shop down the street. How can we package this together to make it easy to digest for the franchisee that's going to come in and spend all this money and put their life on the line?
Yeah, no, it's a great question. I think anytime you're looking at franchising, if you're a business owner, hey, I want to franchise, there's some things you really have to consider. One of them is it has to be simple and scalable, right? Because you're teaching this concept to somebody potentially has never, not only have they never owned a business, they may never have, especially never owned a business in the pet industry, right? And so the prototypes that we built were very different than our traditional family stores. They were simple. They were designed to be run by as few as one person at a time. They didn't have any pets. We only teamed up with rescues. They were very clean. They were very cookie cutter as much as they could be. The idea was simple systems, simple processes, simple marketing strategy, something they could scale and scale quickly. And so it was a big change from traditional. And then ultimately, back then, our niche was, we were kind of a Trader Joe's for pets back then. And that was really early in the game when there weren't a lot of natural anything in the pet industry. And so, my family had been doing it since the 80s. We've been kind of the natural pet food kind of leaders in that area. And we just took that, we packaged it. Ultimately, my vision was always the future of the industry is pet services. And so we started with kind of that nutrition slant. And then in 2011, we shifted to a strong service slant. And so now we're pet services platform more than we are, a traditional pet retail business. And so grooming, self-wash, daycare, those kind of things. We just launched mobile grooming. That's the next phase of kind of our iteration of services. And so, it has to be scalable. You have to have niche. And what separated us at that time was nutrition. Now what separates us is we still have the nutrition component. We have a national certified pet dietitian program, the only one in the country. We have 1,400 staff members, franchisee staff, as well as corporate staff across the country that are trained in this. We even have a vet program where we train vets, staffs, and bring them into this. So nutrition is still a big part of it. But the bigger play now is our knowledge and understanding of how to maximize returns via services. And so you have a lot of mom and pops out there that open their own pet stores, but they don't have any idea how to run services. And so, they come into our mix and we teach them how to manage services, pet services, how to really get the biggest bang for their buck and get a lot of value out of a very, very small space. You cut down a lot of the headaches of trying to figure it out on your own. So, and obviously we have product discounts and things like that, but that's such a small part compared to the ultimately what we're trying to offer.
So like the grooming is one of the core pieces that drive people into the stores.
Yeah, we'll do about $40 million in grooming revenue this year nationally in our stores, which is up from about 25 last year. That's how big of a jump it is year over year. Yeah.
So. What do you see that's a huge jump. Where does that come from? Is it from the standpoint of you guys marketing it differently?
Yeah, it's there's a specific kind of in-store strategy that we utilize to grow service revenue, and to really create loyalty with groomers and our bathers that are within our system. But it's a pretty kind of detailed step-by-step system on how to grow your grooming revenue. And it creates loyalty, right? Loyalty comes from either pet food purchases or grooming. It's one of those two is the stickiness within the industry. And so those are kind of our core competencies that we focus on.
But the smaller locations, you're not doing daycare or things of that nature?
No, we only have a handful of locations that do daycare. We're into prime location kind of retail. We're in prime locations which don't tend to lend towards daycare, whether it's zoning or just it doesn't have a return. And it's kind of like you have to really be in a kind of a light industrial play in order to have a daycare option.
And so as you learned this, as you started doing it in 2008, I guess one of the big pieces of this was you trying to figure out the locations for these. So you had as a franchisor, for those the listeners out there that maybe are trying to dabble on that end, which I know there's few and far between. It's more of the franchisee that's going to come in, and people like you have done the hard work. But is that something where you had to put on your real estate hat and really spend that time to learn what locations in these cities are going to work the best, and then start building the relationships with the different brokers and things of that nature?
Yeah, we started out, when you're early stage, for those that are interested on the franchisor side, in the early stages, it was a lot of, me and my business partner at the time, Dan, literally traveling to the cities and checking out the markets and trying to grasp what was working, what wasn't. Now we have so much data on a national level, it's really pinpointed. It's like, hey, this is the kind of location that works. This is what we're looking for. There's some key metrics that we look at. We do have a national broker that we use for all of our real estate deals that help franchisees as well as corporate stores. And they know what we're looking for, and it's pretty cut and dry at this point. But in the early stages, there was a lot of, you're looking at traffic patterns and sitting in parking lots trying to see what that in and out flow feels like for that center. Is it a dead center? Is it an active center? Is this location just getting glossed over, or is this location actually core in the center? Some things that we learned, and it's not just for our industry, was if you're in a grocery store anchored center, for example, Andrew, and you can be in a location in a really high traffic grocery store anchored center and have zero effect from that anchor because you're positioned incorrectly within the center, right? So you might be like, hey, this is the center I want to be in, but you're around the side and nobody ever goes over in that area, and you've just wasted several $1,000s a month on additional rent because of the center for something that's not worth it. And so having some real understanding of what does and doesn't actually drive traffic is important. And we ultimately had to build a model, and this was partially just I think a good recommendation for anybody that's looking at a business play is we wanted to build a model that could be a destination kind of a model. So it wasn't reliant upon the neighboring businesses, right? And so, is your marketing strategy such where regardless of where you are, you can drive traffic? Is your call to action so enticing that you can put it anywhere and still draw traffic? And we have some stores where you look at the locations, and it's a standalone building. It's not in some high traffic center, but it has some huge pylon sign, right? There's certain things that are just kind of unique to drive traffic to the markets, but typically it's pretty cookie cutter at this point. But yeah, you have to be a real estate expert essentially to be a franchisor. You absolutely do.
And then did it, you got the big competitors that we talked about earlier. Yep. We don't want to, market them too much on this podcast, but did they, you find this great location and then all of a sudden, do they show up in your backyard? And is that, you guys have such a niche that it didn't matter?
Yeah, we actually prefer to go next to them if possible. I wish they didn't have center exclusivities because I'd go right next door to them. And so, our product selections are more curated, they're better, our service focus is better, and our prices are competitive. So there's not a lot of negatives to having them nearby. And so, that's actually a big surprise oftentimes to franchisees, like, you like find out where these big guys are and go across the street. And what are you talking about? Like, no, seriously, it's kind of the gas station play. Like, people are going there looking for products for their pets. And if you have a better service and you're competitive price-wise, they're going to go to you. So, so it's not a real risk for us to have them nearby. In fact, it's actually encouraged. That's a little different. There's a lot of industries where it's like, you have to stay as far away as possible. I think of it in terms of, you can think of it like the home repair, Home Depot kind of a play, where you have Home Depot, you have Lowe's, and then you have Ace, right? Ace is the franchise play. Ace is one of their core strategies is to put an Ace hardware on the way home before you pass those other guys. And so it's like you get off the freeway, you go buy Ace before there's a Home Depot, before there's a Lowe's. They're literally just siphoning off some of the traffic to the bigger guys. So
yeah, no, that's I try to hit Ace a lot because it's just easy. You feel like you're supporting that more of that small business, and it's just easier access in and out. And they usually, and I assume yours is very much customer friendly. It's usually the those type of results you get in there versus just wandering around in one of the larger competitors of yours, where it could take a long time to find what you're looking for.
Yeah, and then there's some specific reasons they do that too, right? The longer a customer wanders, the more they're likely just to start throwing stuff in their carts. But yeah, the service component I think is a major differentiator.
So one of your, I guess the differentiator that you guys had, you had indicated the holistic type of on the food side, and doing that in the 70s and 80s and 90s. It's more commonplace now. My two French bulldogs, I think they eat better than me
Yeah.
a lot of the time.
That's why it's the greatest industry out there, right? It's like people eat ramen, but they won't do that to their pet.
Yeah. Was that hard to convey to the people when 20 years ago?
Oh gosh, yeah, no, it absolutely was. I actually remember very clearly in the '80s specifically. When my mom was a hippie, right? She grew up in California. She was a hippie, so very much into natural, holistic stuff, even on the family dynamic. And so, putting all these natural products in pet stores back in the 1980s, everybody's like, "What are you doing? Like they're pets, you know?" And her view was always, "No, they're not. They're family." And that was always kind of the approach. And then that was before you had some of these larger national chains that were out there. And so when some of these big guys came in, that was the differentiator. And our stores, even the family stores, continued to grow. They were successful, and regardless of what was happening around in terms of the competition side. But now in this day and age, it's commonplace, and I'm glad that it is, because the whole purpose here is quality of life for our pets, right? It's quality of life for our pets. And so if the pets are getting fed better, whether it's by us or somebody else, then awesome. Like that's the end goal. We actually have a marketing campaign called "Let Us Help You Buy Better," and it's like, hey, come in. Our dietitians will train you on nutrition. They'll give you the information that you need, whether or not you buy from us. Let us at least educate you on what to feed. And now the trend isn't natural anymore. Natural is just expected. Our name EarthWise is actually very intentional, because when we started franchising back in 2008, it was under the umbrella Nature's Pet, and the purpose for it was natural pet, right? But in 2011, we shifted that to EarthWise. And the reason that we did that was we believed that natural pet food would become the norm. It would no longer be special. It would be expected. And that the next phase, the next iteration of development would be sustainable, eco-friendly. And that's why we shifted to EarthWise Pet. And so now our push is, natural's expected. It's you're supposed to have it. But now, let's have sustainable sourcing. Let's make sure that we don't run out of meat to feed our pets. Let's make sure we don't run out of fish to feed our pets. Let's make sure we have these things and they're sustainable. And so the products that we sell and that we promote practice sustainable sourcing, so that it's going to be around for a long time, and you're not going to worry about massive recalls, right? That's just an important component.
And so as of today, what's the model look like? So you do still own some corporate stores along with is it 400 plus franchise?
Yeah, so for the franchise, so we have our mobile franchisees, and then we have our physical storefront brick and mortar franchisees, and then we have corporate. And corporate has both mobile and brick and mortar. So we have 51 corporate stores currently, and we'll have about 20 corporate mobile grooming vans on the road before year end. On the franchise side, we have a couple of large multi-unit mobile franchisees that are developing 100 vans in the next basically 24 months. And then we have kind of the smaller ones as well. And then on the physical storefront side, we'll have about 180 by the end of the year. So.
And on the mobile side, is that margins a little bit better there?
Fast return, high margins. In fact, every one of our brick and mortar stores now, we encourage them to have 1 to 2 mobile grooming vans before they even open their doors. Just because of brand awareness in the marketplace, as well as just the cash flow that it generates. It absolutely mitigates the risk. So we've really been able to dial in the mobile to the point where it's kind of a no-brainer. And so we have all these existing older legacy franchisees now that are starting to launch mobile, because it's just a really easy extension to their store without having to open another physical one.
I'm always fascinated by family businesses. So the dynamic when you came on board and then you started, moving forward fast on the franchise model, franchisor, franchisee. What was the dynamics like with mom and dad and the business that was already successful and thriving for 30 years almost?
Yeah, obviously, you go into it pretty altruistic, thinking it's going to be all great, and then you get into the family dynamic, and the way you did business 20 years ago is not the way you did business today, right? Or 30 years ago. I remember my dad being like, when he'd open a new store, for the marketing strategy, it was, he had an inline ad in the yellow pages or the white pages. Like, that was it. and that's all he did, and put up a shingle, and he was good to go. So when we were getting into franchising and preparing for franchising, it was very clear to me that this wasn't a journey that he was going to be able to go on, because he was used to really having a lot of control. And in the franchising world, you have to, there's a balance with franchisees and the franchisor to make sure that you're helping them and guiding them. But ultimately, they're the business owners. So that was going to be a challenge. And so that's why, it was the right timing. He was ready to retire anyways. But the early stages, it was a blast. It was fun to work with, but had its challenges. I wanted to do things a certain way. He wanted to do things a certain way, and he'd been doing it for a long time. I just didn't think that some of the ways that he was doing it would be able to last as things were changing. But I was arrogant and I was young, and so I look at it and go, I probably should have listened better. Looking back at it, like I was the kid that hadn't been running a business for 20 years at that point, and so.
Yeah, ignorance is bliss sometimes.
Yeah, exactly.
And over those years, did they ever, these roll-ups and the larger competitors, was there times where they had buyout offers that they had to, take into account and figure out if they can, can we compete with the big boys? Or, you guys were pretty big yourself, but was that something that you had, that you saw too, that they had to battle with of, do we sell out?
My parents never had to deal with that. They didn't have enough stores to really kind of garner the interest of that. The first time that actually came across my desk was we had 10 locations. We were pretty early on in franchising, and we had a national player that sent basically a buyout offer, and I was kind of stunned. I thought, whoa, what is this? And at that point, I didn't understand really a lot of the investment world. I was just a small, mom and pop business owner. Even though I was a franchisor, we had just a handful of franchisees. It was very much a family kind of thing. But that was the early stages. That was probably 2010. And then when we started to do roll-ups and acquisitions, and we made 9 acquisitions in the last 18 months, and everything's changed. All of a sudden now, my life is very different than it was. My daily activities are dealing with investment bankers and family offices and private equity groups and all the interested parties that want to either help us grow or want to buy us out. Mm-hmm. And so, I miss sometimes the old hey, let me build your shelves for you kind of stage. It's changed.
Yeah, the boots on the ground. And what are some advice as you were doing in that part of the business, boots on the ground and growing, a thriving company that existed and then taking it to the next level? You as now thrust into the CEO role and wearing a lot of different hats in those beginning years and early 2010 to 2015 as you were in growth mode. What did you have to learn as the CEO, where you had not only employees of the corporate side, but now you've got these franchisees that have entrusted you to help get them to the next level, and then all their employees. Doesn't matter if somebody's listening as a franchise or not; they're a business owner. Hopefully, they want to continue to learn and grow. What type of things did you have to learn?
That's a great question. I had to, as the CEO, even when we didn't have that many stores, as a small business owner, you have to have your hands in pretty much everything. You have to have some level of expertise in all the different areas, whether it's marketing, whether it's accounting, you have to finance, all the different areas, human resources, and I just became passionate about learning about all of them. For example, I went and I got an internet marketing degree because I wanted to learn how to market. Some of the things I did, I wouldn't suggest that the average, that everybody that owns a business should go through some of this stuff. I think I went a little bit overboard on some of them, but getting an MBA, I even went and got a master's in public administration because I wanted to understand the sustainable component to what we were doing and how we could potentially do cause-based business. I just became passionate about learning. Some of the things that I think were really core to those early stages was definitely the finance and accounting side. Not just how to read a P&L, but what kind of resources are out there. What am I trying to do? What's my exit strategy long term? I didn't have an exit strategy. I just wanted to grow the thing, and so at that time, I didn't realize that I needed to be growing towards something that was of interest and value, perceived value even to somebody else. I was always thinking about what I wanted to do. And I think the other thing I would recommend to those that are like what in the early stages like that is the networking component. I really talked to a lot of other people in the industry. I became very good friends with a lot of other people in the industry. Whether it was the regional chains, whether it was a small owner operator that was doing really well, or the national ones. Now, I know most of them. I know most of the major players in the marketplace. Most of us are friends in our industry, and so it's nice. You go to a trade show, and I'm not going to walk the floor anymore like I used to back in the day for a trade show, but I will certainly be having coffee or having having meetings with some of these industry players that are good friends now, and so. The reason I think that's so valuable is you learn what's worked for them. You learn what the marketplace is doing, where the trends are going. Being able to see those trends and anticipate them is the reason that we're even growing and successful right now. COVID hit, but before COVID hit, we knew for a long time that, hey, there's got to be a way for customers to be able to order online and have pickup or home delivery. That was so we were spending a ton of resources. Our franchisees are like, why are you doing that? Customers just come into the store. I was like, at some point you're gonna be grateful that we are, and you're gonna come to us and ask us to flip the switch. Well, COVID hit. They couldn't sell in their stores anymore. And so we get on webinars, and in 48 hours, we took half of our franchisees and all of a sudden they could offer curbside pickup. Because we already had the infrastructure in place to do it. We had to just flip the switch and onboard them. And they survived because of it. And so, I think that was in large part because of this networking effort and understanding what other industry players were seeing in the marketplace and being able to realize, okay, we need this. And it might not feel like we do, but we will at some point need it. And it's time to start investing to make sure that we can be prepared when it is needed. So, it's business owners, when you have one store, or even if it's an online business or something else, you're in your early stages, accounting, finance, all those kind of core things, and then marketing. In today's world, I would say you got to understand artificial intelligence, AI, and its benefits and impact in marketing specifically, and automation. Our marketing team, we spend a lot of money right now on artificial intelligence and streamlining via that. We have our own internal language models specifically for pet nutrition, as well as for even staff. Like we have staff members where their entire knowledge base is downloaded into a chat bot, so that other staff members can basically download their mind via that chat bot just to improve efficiency. So
it's great putting the resources in, and it makes things more efficient, and also probably allows you to continue to increase your franchisee fees as you get new stores coming online or new mobile.
Yeah, there's a balancing act there, but for sure, if you're improving their bottom line and their margins, there's also going to be more flexibility in the fee charges and the ability to make money on the franchisor side too, for sure.
What do you normally tell your franchisees these days? They're getting into it, maybe just one store. What's the break-even point? Is it a year, 2 years, or is it different in location?
So it depends. Mobile versus a physical storefront, right? They're two very different ones. In the physical storefront, the services ramps quickly. The retail and the food is a much slower transition, but much more loyalty long-term. And so, our franchisees, a lot of them get SBA financing, so that kind of puts you in the ballpark. You gotta hit break-even cash flow at some point in the 8 to 12-month range in order to be able to really qualify for SBA financing. That's on the physical storefront side. On the mobile side, it's quick. So, and that's just because it's you're not having to wait for build out. There's not a lot of CapEx involved, and there's a very clean, fast marketing strategy, and you're not dealing with retail, right? Retail, it's like I said, it's that slow build, lots of longevity. Our stores are almost boringly consistent when it comes to their growth, just because it's just the nature of the industry. So you don't see the super fast growth and then you're having to maintain it. It's just year after year after year after year after year. So it's stable. That's why it's recession resistant. It's long term. But yeah, 8 to 12 months is usually the target for stores, and then for mobile, it's quicker. So.
And then on the
again,
marketing
that's target.
Marketing side, if you've got a couple different stores in the in a metro area, maybe corporate, maybe franchisee, how does that work with the marketing so they're not cannibalizing each other, or that the corporate's not cannibalizing the franchisee?
Yeah, we've intentionally targeted specific markets for our corporate stores where we don't have a lot of franchisee presence, to get into markets to start to kind of jumpstart those markets. And we're not in the business of a lot of corporate stores. And so, right now, for example, we have kind of a sweet spot of how many stores we want. We want them for pilots. We want to be able to roll out private label, that kind of thing. And so even in a market where, hey, there's franchisees, if we have corporate stores, chances are we're probably going to flip a lot of those corporate stores to franchisees so that we don't have a conflict of interest in it. Even of our 51 right now, we're looking at other acquisition possibilities. And if we do that, we have to flip a certain number of our stores in order to not have that conflict. So we're not in the business of having a lot of corporate stores. Some franchises like 50-50. There is that real conflict where there's a lot of overlap and you're fighting over the same customer base. We've always taken the strategy that if there's a lot of franchisees, we're not going in there. That's their area. In fact, we want as many of those territories to be franchised as possible. So we actually have about 20 locations even currently on corporate stores that we're actively trying to flip to franchisees because we want that market to be a franchisee market.
And then when you guys make these acquisitions, they become an EarthWise Pet brand at that point?
Yeah, so it depends. We have a couple, like I said, we have our EarthWise brand. Our mobile grooming brand's called Groom Bar. We have a Groom Bar standalone grooming salon as well. So if it's a standalone grooming salon, it would become a Groom Bar. If it's a physical store on the corporate side, we might hold it and not change the name until it's flipped to a franchisee, so that they can benefit from that brand change and that grand opening. But yeah, ultimately it's any store that's a nutrition center and spa would ultimately become an EarthWise. Any store that is just a grooming salon would become a Groom Bar.
You mentioned just briefly there white labeling, so that's going to be something that you guys are going to be testing out, white labeling your own brand instead of incorporating other brands in.
We have about 215 SKUs currently that are private labeled, and that's anywhere from treats to shampoos to even food. We have a freeze-dried raw that's coming out as well. But we don't use the EarthWise brand on our private label. We have our own family of brands intentionally. So that there's some liability protection and so that they can also be in Groom Bars as well as EarthWise locations. And so it's kind of like the Kirkland Costco kind of play.
So what's the plan? I mean, you're growing. Is there if you're having fun still, do you want to get to a point where you take this public, or is the goal to potentially, sell it out to private equity? Obviously, you don't need to go into too much of the details of that, but like you're having more so, are you having fun doing what you're doing?
Your responsibilities there, yeah.
That's right. Are you enjoying what you're doing right now? And you've been doing it a while. Is there an end game for you at some point where you kind of hang up the baton?
For sure. I think you got to have the motivation, you got to have the bandwidth and the energy to do what I do for a long time. For me, whether it's bringing in a sponsor backing partner or whether it's going public, I'm not sure that I'm not sure I want to be a public CEO, frankly. I think there's some. Yeah, I'm not sure that matches my own kind of persona and personality. But I could see bringing in some investors and helping out on that, a family office play or something like that comes in. We're not sponsor backed at all, which is pretty unique for a company our size. And we've taken a lot of pride in being able to get to where we are without that. And so if we do bring in a partner, we're going to be really, really picky. I've talked to over 150 of them over the last couple of years, and kind of exhausted from talking to them. But there's only a handful out of those that I would even entertain, really be interested in, just because they aligned with kind of what we believe our franchisees need. So.
And how many pets do you groom in a year, based on general? I mean, what does the number look like?
Well, a typical groom is about $65 to $70 a groom, and so you can kind of back into that from what that number looks like. But it's getting pretty big these days. gosh, what is that? I'm just trying to think of what it'll likely be this year. It'll be...
Well, not even the number, like the amount of like dogs and cats. It's like, I mean, I'm just trying to think the tens of thousands.
So we'll probably do over 600,000 grooms this year.
Wow.
But obviously, that's not 600,000 pets. There's people coming in.
Yeah, multiple.
Quite a few times in a year kind of a thing. But yeah, it's a lot of grooms.
Yeah. Some are probably weekly on the radar. I got to keep her shiny and new.
Exactly. It's like a new car. Exactly. Typically 4 to 6 weeks is kind of a time frame. So
you guys never got into the vet side of things, and that was on purpose.
We have 4 veterinarians that are franchisees in the system, and to have vet offices. But that's not. We team up with vets. We haven't really decided to get into the vet space specifically. There's quite a bit of concentration in the vet space right now.
Yep.
And there's a lot of PE money in the vet space, a lot of roll-ups that have been done in the vet space. Similar to dentistry, a lot more regulation in it. So I think for us, it's like, hey, we want to stick to our core competencies. We don't want to spread ourselves too thin. We know grooming, we know pet nutrition. Let's focus and stay aligned with that.
Yeah. And I've read some articles on all the roll-ups on the vet side, and good or bad, but sometimes it becomes part of the bottom line. And then are they doing what's right for the actual animal and the owner, or are they trying to maximize return? Well, that could be a whole conversation, but I know that's happening in a lot of industries. But obviously, PE comes in and sees vets as that's a recurring revenue model, and spend money at all costs because we love our animals so much. So I think that's definitely something that I don't think people know that, because they don't name them the same. They're not just one umbrella. They don't realize that they were rolled up a year or two ago, and now they're part of this huge conglomerate.
Yeah, there's a lot of regionality in terms of the names, but they're usually under a larger player for sure. Yeah, it's an interesting thing to watch. There's been a lot of private equity money that's come into the non-vet space too. In our industry, a lot of in the distributors specifically, a lot of distributor roll-ups over the years, some that have been successful and some that have absolutely tanked the service and the industry itself and created kind of a bad taste in a lot of people's mouths. I think that's with any industry. It's like, is it good money? Is it not good money? Like it's there's different strategies and different exit strategies. You can't fault them. I mean, it's their MO. It's what they do. It's just, we try to align ourselves with manufacturers and with companies though that have really been judicial about their decision process in that regard. There's still some major manufacturers, specifically food manufacturers, that are family, 4th, 5th generation family businesses. I have 2 in particular. I could think of one of them over 70 years old, one of them's over 100 years old, and these are companies that have never had a recall in their entire existence. And it's because they're really careful about their sourcing. They've either not gone into this roll-up play and they've really kept to their tune or not, but they're still out there, and it's actually kind of amazing to watch. I'm pretty good friends with a couple of them, and I'm really excited to be able to partner with them because they need people like us that can grow with them. Otherwise, they have to make a jump, and they don't want to.
And so as we wind down, some of the things that you brought to the table for the audience, it's know your brand. If you're going to go on the franchisor model, keep it simple, know your niche, and build the systems and the procedures and the processes to make it seamless.
Yeah, I think you nailed it. As a franchisor, whether you have 10 franchisees or 100, they expect the same level of service, and so it's you got to build it regardless, and hopefully you're willing to invest in it.
Oh, one question I forgot to ask. How many employees are under the umbrella now?
On the corporate side?
Just in general, like between corporate and like how many are you that you're not running on a data, but even on the franchisee model, like how many employees do you our stores average anywhere from 7 to 12 employees per location.
Okay. And so I think last check that I saw, there was just over 2,000, I think is what the number was.
That's awesome.
Yeah.
And it's nice where you don't have to manage all of them, your team, which is great.
Yeah, no, that's a definite plus for sure.
Beauty of the franchisor model.
Yeah, absolutely.
Well, I think all of us who are pet lovers, which I think it's a majority of people out there, own some type of pet, love what you're doing, and bringing to the industry the healthy food and the grooming to keep them from shedding and keeping them happy, and love what you're doing, and competing with the big players of the space. You've done a tremendous job over the last 20 years, and a lot of times they say family businesses by the third generation, it's T-shirt to T-shirt. Doesn't look like that's going to happen with EarthWise. So congratulations on that.
Thanks, Andrew. Appreciate it.
All right. Well, this has been great, Michael. All of everything we talked about will be in the show notes, descriptions. So if you have not checked out EarthWise and Michael's story and the company, make sure you find one and support a firm that's doing things right and growing the right way. Appreciate the time today. This was great. Learned a lot. And for those of you who are, find this beneficial, make sure to subscribe to the podcast, like the YouTube video, send it on to your fellow animal lovers or franchisor learners, and happy planning, everybody. We'll be back real soon with a brand new episode of Your Wealth and Beyond. We thank you all for your time.